We now return to Illinois Rising, presented by the Illinois Opportunity Project, the radio show discussing honest truth about Illinois policy and politics. Here's AM 560's Dan Proft.
Dan Proft back with Pat Hughes on this edition of Illinois Rising. And Pat, the tax cuts and tax reform proposals that, well, the one that passed the House and the one that's kicking around in the Senate, and the reconciliation between the two at some point, ostensibly, possibly, optimistically in some quarters, could have very different impacts in different sectors of Illinois because of some of the thresholds that have been proposed on the reform side with respect to deductions and expensing. Some could be very positive for business. Others could be very challenging for what I would call the working rich, who I think, at least in the House version, are sort of financing the relief elsewhere. When you talk about capping mortgage interest deduction at $500,000 or $1 million, you talk about capping property tax deduction at $10,000, otherwise eliminating state and local tax deductions. So in high tax states, and which Illinois is the highest, you may have some people not see much relief, if any relief, from this. But on the plus side, there is real enthusiasm about the corporate rate reduction, as well as the business expensing reform that would not only kind of onshore overseas revenue for multinational corporations, but also just make it a more friendly place to do business from a corporate perspective in this country. And so it's interesting to get different perspectives on this, particularly because in the Senate there was concerns about the pass-through capital for S-corps, whether that rate reduction was going to be enough to spur those small business job creators, and that was a point that Senator Ron Johnson from Wisconsin was making.
Yeah, Dan, it's actually a good point. Look, these bills are always complicated, and you get the Congressional Budget Office, you get various groups coming in and opining on what's going to happen 10 years from now, and a lot of it is trying to read tea leaves that are impossible to read. I'm actually a supporter of this for the reason that you just said. I think that the corporate tax rate in our country makes us non-competitive with countries that we compete with, and that is a great first step. And even if people like you or I take a hit in a high-tax state like Illinois in the short term, in the long term, the economic growth that is let go and encouraged by the lower taxes on businesses and small businesses and corporations will be offset.
Yeah, you're talking about a lot of economists, including a bunch that signed an open letter in the Wall Street Journal this week predicting 3% plus GDP growth. We've just now had this year 3% GDP growth for 3 straight quarters for the first time in 12 years. So that's an important consideration. To get another perspective on this, we're pleased to be joined by Zach Model, who's the Chief Alignment Officer at Atlas Tool and Die Works in Lyons. Zach, thanks for joining us. Appreciate it.
Great to be here, Dan. Thanks for having me.
So from a manufacturer's perspective, the real wealth creator in terms of sectors, a multiplier effect in manufacturing that you don't get from the service sector, which I say is so key in the Midwest and in Illinois. What's your assessment of what's being bounced around in D.C. and how it would impact manufacturing in Illinois?
Well, I agree with what Pat said. This really, it moves the needle in the right direction. And I think it's important that we show some progress on making America more competitive globally. I'm excited because I think we're going to get the camel's nose in the tent, but I think that there's a little bit more we could really do in terms of making the U.S. more competitive globally. I think, my company, my family owns a series of small businesses, and I guess we would fit in the category of working rich, although I don't consider ourselves rich, but we own some businesses. We've got a C Corp, an S Corp, and 2 LLCs, and we generate the most of our profit at the C Corp, so we're definitely going to get some good relief there that should help us be able to invest more in the business and hire more workers and grow the business, because that's really what we're all about here. And so I see that opportunity, but I would love to see, and this bill isn't done yet. They're making sausage out in D.C., and it can be kind of messy sometimes. There might be an opportunity for some more improvements, because I think it's not just about lowering the rate, but broadening the tax base, and I think that's what they failed to capture in the tax reform here. So that's one thing I'd really love them to address.
Zach, take the listeners through. I think it's very interesting because what happens on the left is they demonize corporations, right? So they think every corporation is like, ABC Corporation from the old cartoons, right? This giant conglomerate, and they don't realize that there are corporations like small businesses like yourself that you own, and they think that if there's a corporate tax reduction, that all you're going to do is you're going to hoard that money and do nefarious things with it. Take the listeners through quickly, sort of like, okay, if you get this tax cut, what does that allow you to do for your business? What can you do specifically to expand your business, which of course leads to you being able to, employ more people, leads to job growth and an expanding economy. Take them through your decision-making process once this corporate tax cut comes into place.
Well, I love what you're saying because, I hate the way people demonize corporations. This is where wealth is generated. This is where profits are made. And people have jobs, right? And if their corporation is healthy, they have a healthy job. And I think that link needs to be made very, very clear in the media, in Congress. Everybody needs to understand, healthy corporations lead to healthy individuals because you have good jobs. And there are some big, bad companies out there, but that's far most of the exception to the rule. Most of them are good companies. A lot of them are small businesses like mine, and so what would happen? In my case, if we get a tax break, we're busy right now. We've been expanding. My family has been investing in the business for the past several years, buying new equipment. We bought a new building. We're expanding the plant. We see a real opportunity in manufacturing, and it's also there in mining and in farming and ranching as well. The people who are producing wealth in this country are as you see with the GDP numbers, there's growth going on right now. There's opportunities to export and sell more, but in order to capture that growth, we need to be more efficient. So that means investments in machinery, plant, and equipment. Also investments in people. In manufacturing, we have a skilled workforce shortage. A lot of my folks are getting ready to retire. I need to invest in training programs. So, my thought process is any money I'm going to save, I'm going to plow back in the business because I expect it to make me more money in the future. I'm not looking for a short-term gain here. I'm not looking to put money in my pocket today. I'm looking to generate long-term wealth and long-term reliable income, not only for myself, but for my team members who work on my team. So I think we really got to stop demonizing corporations, and we should be celebrating when they make profits and when they can pay their workers good wages.
Yeah, business is a service organization, right? If you're not serving your customers, if you're not making a hospitable place for talented people to work, you won't have a business.
That's right, and we talk about jobs, and look at Illinois. I mean, we've made it a pretty inhospitable place in Illinois. People are fleeing. Businesses are fleeing. We're a perfect example of how you can do it wrong. But then you look at other states where they're growing, where they're landing jobs. It's about setting an appealing table, and business comes and generates wealth and creates good jobs. So I think that's really important to understand here. But, in terms of the tax reform and some of the changes we might see, I think, they're gonna hopefully address the pass-through income, because that is an important thing. Like I mentioned, my C Corp is definitely going to look better if this tax reform passes, but my other two companies might not get as much relief as we'd like to see. On the pass-through side, it's the same. Whether you're a C Corp or an S Corp, whether you pass through income or not, most small and mid-sized businesses are looking to reinvest the majority of any savings that they would get, because we see future growth being better. That's what we're going to make our profits in the future, if we can really get things on track here. But, I think, again, we're missing the chance to broaden the base with this tax reform. And that's one message that I really hope Congress hears. The way we do, for example, sales tax in the states, it's called sales factor apportionment. And basically, companies who do business in Illinois or any other state, they pay taxes on you pay taxes on where you generate the income, not where your headquarters are. And I think that's what we're missing right now in the tax bill out in Washington, D.C. We need to redefine the source of income. That's the key to correcting the current dysfunction.
And which policy regime has the most impact on your day-to-day business in terms of profitability and viability? Is it what the federal government is doing on tax policy, or is it all the policies that drive business climate at the state and local level here?
Well, it's a combination, but what's really important to me is that my customers are healthy and that they buy from companies in the USA, right? I'm part of a global supply chain. I don't do a lot of direct exporting, but I supply to big businesses that do export. And if those big businesses have a disincentive to buy from companies in the U.S., have a disincentive to keep their supply chains in the U.S., I have a problem. And so whether it's Illinois policies that drive my customers farther away from me, that makes it less competitive for me to ship to them, or whether it's federal tax policy that makes it more profitable for my big customers to generate their profits in Luxembourg and move their supply chains to Asia, I have a problem. That's what really impacts me and the jobs in the U.S. So, while getting some savings on my income tax, that is wonderful, and I think a lower and a simpler tax rate is great for everybody. But, and again, perception drives reality. So if we have this perception that the U.S. is getting more competitive, I think we will see jobs start coming back here. But I would really like to see them deal with how the tax base is actually calculated. Because you can lower the rate, you can raise the rate, but if you're losing taxes out the door to foreign countries who have these inversions and all these other things, you're missing the whole base. You need to change the way you tax, the way you do the tax base, and I think they're missing the boat here right now in D.C. on that opportunity.
All right. He is Zach Model, Chief Alignment Officer at Atlas Tool and Die Works in Lyons in suburban Chicago. Zach, thanks so much for joining us as always. Appreciate it.
Pleasure to be here today. Thank you both. Bye-bye.